Good morning, good evening, good afternoon, whatever time it is that you're watching this. I hope you're having a great day. Welcome back, obviously. In today's video, I'm going to break down one of the most powerful but overlooked tools in market structure, and that's called the parallel channel. I'm going to show you what a parallel channel is, how I use it specifically on NQ futures, how it aligns with ICT concepts like premium, discount, and liquidity draws, and how it ties perfectly into my own concept called the CLM. That's called the Channel Liquidity Model. By the end, you'll understand why tracking channel flow shows you where price is balanced, where it's stretched, and where the highest probability setups can format. First of all, let me show you where the tool is at. The channel tool is right here. This is what it looks like. You can find the parallel channel tool under trendline tools. Click that. And then let me bring this up a little more. You can hit the parallel channel right here, and I just favored it. So that's what's on there. And these are channels. You got the regression trend, the flat top bottom, disjointed. Just if you want, you could play around with others just to see what fits your trading style. But this is the parallel channel under the lines. What is a parallel channel? A parallel channel is simply two equidistant lines that contain price. One line shows support, the other shows resistance, and the center line shows the median flow. So think of it like a road that price is traveling on. This is the road price is traveling on. It looked like a road, right? This is the median. When you're on the street, you got the left side, the right side. Okay. When price stays inside the road, the market is balanced. When price pushes outside the road, the market becomes inefficient or stretched, and that's where opportunity forms. So now I'm going to show you guys how I personally draw my channel on NQ. For NQ futures, I like to draw my channels by finding a clear swing high and swing low, connecting the 2 points to form the first trend line, and then copying the line to create the parallel, adjusting it so the most recent price action flows cleanly inside. I also pay close attention to the middle line because NQ respects that median level beautifully, especially during New York session. This looked like a swing low right here. And then I personally just let it align. Like I want it to touch. I wouldn't draw it like this because it just look wonky. You want price to touch on this line multiple times without drawing it all types of way, if that makes sense. And then if it's not aligned perfectly, you just go back. I want to get it on the point of the candle. I always do the wick of the candle, not the body of the candle. Okay? And you want to try for price to touch it multiple times. So I like that. And then I would bring it to the top of the swing high right there, which is this point right here. And now you can see how price is respecting the road in the middle line, went up to resistance, came down, tapped the support, went back up to the middle line, and now price stretching out of the channel. Let me go over again for me personally. So I grab my parallel channel, I go for the swing low, and I look at the wicks, not the body. I look at the wicks of the candle, and I also do this in a daily time frame. The higher time frame works better for me. However, if you want to use it in a small time frame, just back test it a couple of times before you just start using it in your trade. But me personally, the daily time frame and the 4-hour time frame has worked very nicely. So I'm grabbing my parallel channel. I put it at the swing low of the wick right here. And then I'm just dragging it, and you kind of want it. It's just like any other trend line. You want it to tap on it a couple of times when you draw it. And then you grab it and you take it to the swing high, which is this point right here. You want it to be tapping it. And now you see how price is respecting it and staying in this road that we in. And right now, it's testing underneath the parallel channel. The price pushed it outside of the road. It's hitting the curb now. So price is a little stretched and it's inefficient. So it's trying to rebalance itself. That's what's going on at this present moment in the daily time frame. You can also change the settings. Right click the parallel channel. You can go to settings right here. I bring that over. And you can change the color. You can extend it to the right. You see it just moves over here. Or you can extend it to the left, which is this way. Or me personally, I don't like extending it at all. But as the months continue and the trend line is still respecting it, I just extend it to the right line like this. And then it'll just keep going. So, yeah, up to you. I'm going to go ahead and extend it though. You can change the color of it. You can change the color of your middle line, however you want it, how big you want the lines to be. If you want a dotted line, you could change the thickness, the line style. You could change all that. It's totally up to you and your colors. That's the line. You can also put text in it, whichever you may see fit for you. So you can put daily parallel channel. You can do that. You can do coordinates. I don't mess with coordinates, but if you're into that, you can do that. And that's pretty much it. And you can put the text inside it, the top of it, the bottom. However you see fit for you, you can do it. You can edit it to what works for you. I'm going to explain how channels align with ICT concepts. So this is where it really starts to click. Channels align with ICT in a few major ways. Premium versus discount. When price trades in the upper half of the channel, it's premium. Look for shorts. Okay. When price trades in the lower half of the channel, that's discount. Look for longs. The channel literally gives you a visual 50% equilibrium. Like literally, it literally does. When it got up here, look for short. Sometimes you have to wait for liquidity to happen. So, but you just don't enter just because it tapped it at the tip. You know what I'm saying? Wait for liquidity to happen, find your entry, the regular rules that we follow. Then you take the shorts. Um, right here, it tapped it, but it gave a little liquidity push right here. And then it went long. You know what I'm saying? And then it touched the median area and so on and so on and so on. The top and bottom of your channels are like liquidity magnets. That's what they are, liquidity magnets. ICT teaches us that price seeks liquidity, and channels show you exactly where these pools sit structurally. Displacement, return to a balanced range. When price breaks out of the channel aggressively, that's displacement. And that is what's happening. When was this? Let me see if I could do that. This was Friday, November 21st. So price broke out of the channel aggressively. Right here, it retested underneath the channel and now it's pushing back up to find balance. When it comes back to the channel, that's your return to a balanced range, often lining up with a fair value gap or an order block. This is the time we look for buys. Using the channel liquidity model, the CLM. CLM works by identifying the balance zones when price respects the middle or stays cleanly within the channel. The stretch zones when price trades outside of the channel. And reversion zones where price want to come back into the channel, basically. And that is what's going on at this present moment. By showing whether price is overstretched into a premium or a discount. When price spikes outside the channel, it often grabs liquidity and trap traders and then snap back in. This is one of my favorite setups. Like, I promise y'all, this if it wasn't a holiday, this would be longs all day. It already took liquidity in the discount range. So if it's outside of the channel in the discount range, of course we're looking for longs. This move right here, testing underneath the channel, that's also seeking liquidity, trapping traders. This is exactly why channels work so well with ICT. They give structure like liquidity flow. They help identify what setups have the best probability, and they keep you disciplined. Not chasing candles, but waiting for price to enter your zone. And again, this is the daily time frame. If I go down to the 4-hour time frame, you could refine it a little bit better. See how it respecting the discount zone? This the 4 hour. This at 9 a.m. And then at 1 p.m. it shot up. It reversed. You have to look in these parallel channels in the higher time frame, daily or 4 hour. When you have your bias for the day of what you want to see, then go to the smaller time frame to set up your trade to execute. This is all liquidity that it just did. A bunch of mumbo jumbo. Now price is closing in on the parallel channel, November 28th at 9 a.m. But I hope this video is very effective for you guys. Parallel channels are simple but incredibly powerful, especially when you combine them with ICT concepts and my channel liquidity model. So thank y'all for watching, and I'm going to see y'all on the next one.